That we will be recording this session. And also that as we continue through the presentation, please do share your questions in the chat window and we will get to them during the Q&A session. Also, last housekeeping point to mention is that if we do have any technical issues, since we're all working from home, please do bear with us. All right, so before we begin, I wanted to first give you an overview of who we are as Ikigai. We've got a few members here and some who maybe are not familiar with Ikigai. We are a wellness-focused co-working space in Nairobi. We currently have 3 locations in Westlands, Lavington, Lower Kabete, and we also have a 4th coming up soon in Riverside. And essentially what we do is we offer individuals, SMEs, startups, corporates, and creatives with beautifully designed workspaces where their teams can thrive and be productive. Our memberships are designed to be really flexible and promote well-being and take the hustle out of running an office space. Essentially, the goal is to help you focus on your core business, and this is what we strive to offer. So in addition to that, we have developed a new work from home membership. And this membership is designed to help people stay connected and keep their business running from home, even during this time that we're currently in. And as Ikigai, our aim has always been to add value to our members and the wider community. And we hope that events such as this that we have today will go a long way in supporting your teams and your businesses. Great, so on to the topic at hand today. As Ikigai and as a startup ourselves, we've been identifying different ways to save business costs at this time, and we know that many of you are doing the same. And the Ikigai management team actually recently had a very insightful session with the J W Seagon team, who I'll be introducing shortly. And during this session, they got incredible insights on how to save money on insurance premiums, among other topics. And they've also been doing plenty of webinars and sharing valuable resources as well. So for those who don't know, J W Seagon Group have been present in East Africa for about 25 years, with offices in Kenya, Tanzania, Mauritius, and the UK. They offer a one-stop shop for all your insurance needs, from local and international medical to the widest possible coverage for your business, no matter what sector you're in. And today we're joined by David Seagon and Jeremy Clayton. David is the MD of the group and he oversees the medical side of the business. He has an excellent knowledge and experience of all medical policies available in Kenya and can offer expert, impartial advice on which policy is best for you. Jeremy is the CEO of the General Broking Division. He joined J W Seagon with over 40 years experience in the UK, running his own top 50 insurance brokerage. So with that, I will now hand over to our presenters for today. Jeremy will be leading the main presentation, and then David will lead the Q&A session that will follow. Please remember to share your questions in the chat window. You can also send your questions privately to David if you wish. Yeah, so with that, I will hand over to you, Jeremy.
Okay, thank you, Lisa, for the introduction. Welcome, everybody. As Lisa mentioned, I have been around for quite some time now, which officially makes me old, or I prefer to say experienced. So I will try and impart some of my knowledge to you. I have seen a lot in my time in the industry, 40 years as Lisa mentioned, and I have to say I've been through recessions before, but I've never experienced anything like what we are going through now. So for me as well, it's uncharted territory. Like most businesses, we are looking at our own cost centers. We're looking at our expansion plans, and whilst it is relatively early days, we are looking at where we can save money. Obviously, if our clients' businesses are hit by the pandemic, then inevitably it's going to affect us as well. So what we've decided to do, instead of sitting back and not trying to help our clients, is we're trying to be proactive in offering ideas and concepts to our clients for various reasons, and one in particular to try and save premiums, whether small businesses or large. I would guess many of the clients or potential clients of Ikigai that I'm speaking to now are relatively small businesses, but you know, the shillings add up, and so it's important that we look at all these sort of costs. So if I cover, I will try and cover as many ideas as I have had in this meeting. There may be others. If you want to contact me or David later, our contact details will be shown at the end. So first and foremost, it's your insurer choice. There is a lot of the penetration rates for insurance in Kenya are very, very low, down in the low, I think less than 3% at the moment. If you compare that with the UK, where I am presently, it's around 92 to 93%. So the insurers that we have here are scrabbling for business. As a result of that, they are keen to write new business. Whilst many of them do have minimum rates which are provided to them in the market by the regulator, there are discounts available in the market depending on risk management, size of the business, and claims experience. Also, where there is competition, people want to buy your business. They want to take on your insurances. So if you've been with one insurer for 5, 6, 7 years, it's a good idea to look at alternatives. There are many insurance companies out there. Having said that, do not look carefully at who you're insuring with. There are some much smaller insurers who maybe are not financially secure. You can check on there by looking at audited accounts of the business and capitalization. And again, we can guide you on that. One of the first things that you could consider when talking to an insurance company is committing to them for a long term. And in return for that, you can receive quite generous discounts, anything between 5 and 10% of your premium for signing a 3-year long-term agreement. You will need to ask, it doesn't apply to all covers, certainly not motor, but on general business insurance, it is a possibility. So that's my first advice, insurer choice. Look at who you're insuring with, consider them carefully, and certainly look to open your eyes maybe to the second one is something over 7 years or so that I've been working in the Kenyan market, is what we call duplication of cover. And it's a rather a common thing in Kenya. One the industry around independently for say 60 years, and everybody seems to copy what everybody else is doing. So for example, one of the popular policies that is provided by some of the more advanced insurance companies is a policy called Industrial All Risks, or IAR as it's otherwise known as. This policy is slightly different from a fire and perils policy, as it provides additional covers such as accidental damage. Now, what always intrigues me is they provide you with an industrial all risks policy, but also want to sell you an electronics equipment and a computer policy and a glass breakage policy. All of the covers that you get under those policies are covered under an IAR policy anyway. So you are getting a duplication of cover. It's very, very important to make sure you are not paying twice for your insurances. So that's one of the first things I would look at. Look at your portfolio and look at the various policies that you have. And indeed, for the separate electronic equipment policies and computer policies, you will normally pay about 5 to 10 times the rate that you would pay for a standard fire and perils policy with an accidental damage extension, which equates to an IAR policy, industrial all risks. Our own J W Seagon policies are full all risks, so you'll always have the full cover, whichever one of our bespoke policies that you choose. The second point that we encourage is to look at what is called a first loss cover. Simply, first loss cover is where you decide how much you want to insure for in terms of what you feel the maximum loss could be at your premises. This isn't available on all policies, but certainly is on burglary cover and political violence and terrorism. So as an example, if your total value of all your goods were, let's say, 100 million shillings, but at any one time, only 10% of that could be damaged or stolen in the event of a loss, do not pay your premium on 100 million, pay your premium on the 10%. In effect, you'll save around 90% of your premiums on burglary cover, and similarly on political violence and terrorism, where if you are multi-site, so you may have 2 or 3 offices or 2 or 3 premises, it's very, very unlikely that you will have 2 terrorist attacks at exactly the same time. So why insure everything? Why not insure a maximum at any one location? So that's first loss cover, and it is used widely in the market. If your broker or insurer hasn't advised you of it, it's certainly one that you should be mentioning to them. So on the subject of PV&T, which is political violence and terrorism, this is something that is, we won't advise you not to take the cover at the moment. It's one that we're suggesting that you consider carefully. I'm not for 1 minute suggesting that terrorist activities won't continue during this lockdown period, during the pandemic period. But in my opinion, and it is my opinion, the risk is less, with far less movement of people between countries, businesses in lockdown. So typical terrorist targets will reduce because there is less media impact. It's a fact that terrorist activities tend to be where, sadly, there is human suffering, and where there are no human beings in public places, the media impact is less. So the chances of terrorist activities right at the moment, in my opinion, is less than it has been. So if you need to save premiums, and sometimes PV&T can be quite substantial, now is the time to consider it. As I say, finally, once again, I can't predict what will happen out there, but it's just a personal view. So something to consider. Another important factor is in the industry is cash flow, which is tough for everybody or most people at the moment. Cash is king and cash flow is tough. So we really want to be able to spread your premium payments. There's been a recent article written by the Insurance Regulatory Authority suggesting that everybody should be allowed a 3-month holiday period on their insurance premium. It's being misinterpreted. If you look on our J W Seagon website, you'll see an article I've written about it. I think you need to take it with a pinch of salt. But what we have done historically, and we instigated this quite some time ago, is we have launched our own instalment facility with certain insurance companies. There was talk in July last year that the industry was moving to a strict cash carry, where you had no cover before receipt of premiums. That's been put on hold. It's been repealed. It's in the legal system, and they'll continue to argue probably until 2021. So we'll see where we are now. Even if it does come back in, we have a solution to it. And as I said, we have an instalment facility which can spread your premium payments from 1 month period up to 10 months in some cases, tends to be 6 months, and it's a very efficient way of doing it. So it avoids you having to go to the banks and borrowing money on insurance premium finance at 4 to 6%. It's a lot less than that, and also it will help you during these difficult times of cash flow. So very happy to share more information about that with you. The next way of saving is on your weaver and employer's liability. Just to remind you, if you employ any staff in Kenya, you are obliged to provide weaver benefits to them. Weaver is a Work Injuries Benefit Act, for those of you who weren't sure. And you are obliged to pay up to 8 years of salary to said employee in the event of them being injured or or being killed at work. It doesn't matter if there's negligence or not, you are obliged to pay that, and there is no getting out of it. So if you have employees, you don't have to insure against it, but our advice is you should. The premiums are relatively low compared to the compensation you would have to pay for somebody earning even 100,000 shillings a month. If they were killed at work, you'd have to pay them 9.6 million shillings in compensation. So we recommend you have the Weaver cover, but two things that we work on is, number one, historically the market in Kenya asks you for your wage roll, and your premium is based on your wage roll. What they don't point out is there are two types of staff. One is clerical and managerial, and the other is all others. Clerical and managerial tend to be a much lesser risk than all others. And the reason for that is, like me, you sit on your backside most of the day, and the chances of you being hurt are relatively remote. Whereas if you're out and about, traveling more, driving lorries, security staff, anybody else really doing more manual work, the chances are higher that they will have an injury. As a result, what we advise all our clients is split your wage roll. Always split your wage roll between clerical and managerial and all others. Clerical and managerial workers have a rate probably either a third or a half of all other rates. So it's very, very sensible to notify your insurance company of your split in wages, and you might see quite a significant reduction in your premium. This also applies to your employer's liability insurance, which is the lower the Weaver premium, the lower the employer's liability premium. Lastly, on Weaver, a lot of policyholders buy what's called Weaver Plus cover. So Weaver is an occupational cover only. Weaver Plus extends the cover to a 24-hour basis. So anybody who is injured outside of work is entitled to exactly the same benefits as whilst they're at work. This cost of this premium is normally about 30 to 40% of your Weaver premium. So it is quite expensive, and there is no legal duty for you to provide that benefit. So if you are providing that benefit and you want to suspend the cover or take that cover down a notch to basic Weaver, you can do, save yourself the premiums, but obviously be careful. If it is deemed to be a staff benefit, you may need to consult with your staff or take some advice before removing the cover. So in addition to Weaver and employer's liability, there's another type of cover that some of you may have, which is called public liability insurance, which is injury to third parties or damage, loss of damage to third parties or third party property. And we have several policies there: public liability, products liability, directors and officers liability, and for the service industry, professional indemnity insurance. These covers tend to be based on fee income or annual turnover. So very simply, if your turnover is seeing a downturn and is being reduced, then you should advise your insurer or your broker now to reduce it and to make a saving immediately. They may advise you and suggest that you leave it until the end of the year, end of the insurance year, but of course that's a bit too little too late really. So I would push very hard for reducing it now. Similarly, if any of you are in the tourism sector in particular, the likelihood is you aren't having any guests at the moment. So if you have no guests, you tend not to have much of a risk. So why not take this opportunity to reduce your covers on your liability insurance now, for it to be reinstated when you are back up and running again. It's certainly a consideration. We have over 200 tourism sector clients, and we are advising them exactly of that. And many of them are asking us and saving substantial premiums as well. Moving on, motor insurance. Most of us have motor insurance, and as you will all be aware, if you use your vehicle on the public highway, there is a requirement to have the minimal cover of third party or public liability, passenger liability. It's called lots of different things. Firstly, we recommend you continue with this. You will retain your motor insurance certificate. You don't know when you're going to use your vehicle next, and it is wise to have it in your car so that our friendly police won't ask for tea money from you. So I strongly recommend you continue it, and it is quite inexpensive. For a normal car, I believe from the last quotations we saw was 7,500 bob per annum, and for commercial vehicles it's probably about double that. So I would continue with that. I don't think you're going to get much of a saving. I don't believe you're going to get much of a refund of premium if you reduce your cover midway through your year. So that's the first point. Obviously, if, however, you have vehicles which aren't being used, so in, again, the tourism sector, safari vehicles, or in the transportation industry, a lot of transport vehicles are not currently being used, then you can consider changing your cover from comprehensive to laid up cover. So comprehensive cover will be costing you 3.5% of value on cars, 4.5% of values on commercial vehicles. Laid up cover will cost you peanuts in comparison. We're negotiating currently with revised rates, but it can be as low as third party only cover. So something to consider. However, if you do opt for laid up cover, that will mean you cannot use your vehicle on a public highway. So do not be tempted to jump in your car and use it. So if you know it's going to be static for a period of time, consider taking laid up cover. Some insurers will fight against you and not offer you any savings, certainly if it's midterm, but certainly the J W Seagon partners that we work with will provide you with some savings. So all in all, that's really the summary of some of the ideas that we have. There are others. When I come across insurance policies, more so say for the manufacturing industry, if they've got large production machines, they will have what's called machinery breakdown cover and consequential loss following machinery breakdown. We're advising a lot of those clients that if the machines aren't working at the moment because there's no production, then they can cancel those policies. We have clients who have aeroplanes. Again, we're advising them if you're not flying them, then transfer your cover like motor insurance to it's not called laid up cover, but ground risk only cover. And there are lots and lots of other ideas that we can come up with. We've shared some of them with you today. We'd be delighted to assist you privately or through any questions you have on chat. And I can absolutely assure you, whatever we do is on a no obligation basis. We are here honestly to help. We're trying to help people to get through very, very difficult times. And if there's anything we can do to assist by reducing covers or advising you on covers that you have presently, then please feel free to ask. My contact details will be at the end, or probably going to be popping up in a moment. So you're very welcome to contact me on those numbers, or through the, I think, Lisa, the chat box may be available for anybody asking questions, but please feel free to ask, and I'll do my best to come back to you. Thank you, everybody. That's all from me for now. I hope everybody is taking heed of the rules, and hope everybody is staying safe. Thank you.
Jeremy, thanks very much for that. I've got a few questions that were sent through before the call, so I'll go through those now while we wait for others to come through on the chat box.
Okay.
But first question here, Jeremy, is what insurances do you think are the most important at this time?
Okay, most important insurances are if you have assets, to cover your assets, so computers, contents, general contents, stock. Certainly, if you have any bank finance outstanding and bank interest, they will insist that you insure them. And motor insurance to allow your vehicle on the road is a compulsory one anyway. And the third one for me is most certainly your Weaver cover. It's a legal requirement to pay the benefits, and whilst we all think it's never going to happen to me, I'm never going to have anybody in my employment killed. We saw it last year, unfortunately, where somebody was killed and it cost the insurance company 123 million shillings. If they hadn't had the cover, they would have been in trouble, the company, because it would have had to come out of cash flow. So they're the three really: asset insurance, Weaver cover, and motor if you have any vehicles.
Okay. there's how should people think about loss of revenue cover?
Okay, lots been talking about loss of revenue cover, particularly in the UK, where there are some massive class actions against the insurance companies because people believed that they had loss of revenue cover as a result of coronavirus. They don't. There are some policies which are called non-damaged business interruption, but they're very rare. They're certainly not available in Kenya, and they certainly won't be available going forward. So loss of revenue, loss of income, loss of profits policy, business interruption, they're all the same, tend to be provided as a result of a material damage loss. So a fire or a flood or a burst pipe or lightning damage, anything like that, loss of income as a result of that is provided as standard in Kenya, and it's something that I certainly would recommend you having. Having said that, a lot of the callers, I would imagine, are what I would class as office-based risks. And so if there was a, God forbid, a fire at one of the sites, you could possibly pick up your computer, pop it down at one of the other sites and continue trading quite quickly. So the chances of a loss of income for that sort of client is relatively low.
Okay, there's quite a general question really that's come through from someone on the call, and I think we might just need clarification on this, but it's, have you had any clients receive refunds from insurance companies yet? And I don't know if that question is aimed at COVID-19 claims or whether it's just a general question, but I know on the medical insurance side of the business that I oversee, you know, all cover is in place for COVID situations and claims. So whether it's an international policy, is, you know, the benefits are fully paid. So if that's a claim more related to the general insurance, then, you know, we have also got claims going through at the moment because of all the awful flooding that's going on in Kenya. And I think we have eight clients at the moment in the Mara region that are undergoing assessments. So, but in terms of any COVID related claims, Jeremy, on your side,
Yep.
Have you had any?
Okay, so we've had on general insurances, no, because COVID cover isn't provided here. However, we have two travel claims, which one is for about €6,500, I think it was, which is being paid under the terms of our policy. But as of now, COVID claims are excluded under pretty much all travel insurance policies worldwide. General insurance, no. Travel, we've had two that claims are being paid. And in respect of a question about refunds and credits coming back from insurers, yes, we are seeing them because we've asked. We've said, you know, our clients, our turnover is down, wage roll is down, production machinery is not being used. We want to change to laid up cover. Liability limits are being reduced, and they say, yeah, okay, understand that. So calculate return premium on a pro rata basis, get the credits through, and we pass them straight on to the client. Other clients have asked them just to hold the credit until next renewal, so they can use it to offset against next renewal if it's relatively new period of time. And some clients have asked us if they can pay the rest of their premium over a further period. And again, each one on its merits. If the client's behaved historically, has got a good record, we'll ask. The insurance companies are as flexible as they can be at the moment. So okay. People are rallying around, which is a good thing.
Yeah, no, it's just been confirmed that question was actually related to COVID. But another question here: are insurers allowing clients to modify their policies during COVID, so mid-year?
I can't speak for all insurers. I can only speak for our partners, and they are all of them. I don't deal with certain insurers through various reasons, which I won't go into today. So I can't speak for them, but certainly my partner insurers are all being very, very flexible and will provide us pretty much with what we want, subject to us giving a good reason behind it.
Okay. The question relating to Weaver, Jeremy, and I know obviously with some Weaver policies you can add the medical expenses cover. So yep. I don't know, is there a maximum limit on that? Because the question here is, how do you think about health insurance since people also have to carry Weaver?
Okay, so what everybody has to remember with health insurance, it's any medical condition, whether it's an illness or whether it is an injury indeed. Weaver is accidental injury only. and Weber itself is whilst at work only. So if you are injured at work, you're entitled to the Weber benefits, which, as I mentioned earlier, is up to 96 times the monthly salary for death, and it's stable down depending on the severity of the injury. In with almost, well, every Weber policy I've seen, there is a medical expense and funeral expense extension. The medical expense extension is normally about 100,000 bob, and the funeral expenses is normally about 30. On some of our policies, the norm is 500,000 medical expenses and 100,000 funeral. But again, we have to remember, it doesn't replace medical insurance. It's in addition to, and it is only as a result of injuries at work.
Yeah.
Or if you have Weber Plus, wider than that.
Yeah, I suppose if the question about health insurance, and if the gentleman who asked that question wants to look at ways of reducing costs of their health cover, then there are ways to do this. So you can look at adding an excess to your policy. You can obviously look at reducing the benefits, etc. But it is quite difficult to do it mid-term. So we can reach out to this gentleman who's asked this question directly to see if there's any ways that we can help reduce health insurance alongside Weber as well. So one of the questions I had pre-sent to me was also related to health insurance, and I can take this one, Jeremy. And it was how can we reduce the costs of our health cover? And in terms of health cover, it's not quite as easy as the general insurance. It has to be done at renewal. It can't be done mid-term. But the ways in which you can change your reduce your premiums, certainly on international health cover, is by changing the area of your coverage. Some people have a worldwide excluding the USA cover. And what we can also offer now is a Europe and Africa cover, as well as an Africa and India cover, and that reduces premiums quite substantially. You can also reduce your benefits from inpatient and outpatient to an inpatient only cover. And you can also look at, as I mentioned earlier, adding an excess or a copay, which will also reduce your costs. So again, if anyone on this call has got any questions or concerns about how they're funding and paying for their health insurance, please do send us questions after this webinar, and we can address them directly with you. So that's on the health side of it. In terms of some more questions here, Jeremy, it's could you comment on fire insurance? This is really comes from a tourism related client. Could you comment on fire insurance, which is the highest cost of my insurance, but I've got no guests?
Okay, it's an interesting one. First and foremost, there tend to be standard rates in the tourism sector for fire insurance. Ranges from 0.125% to 0.75%, depending on the construction of your premises. Interestingly, in Tanzania, the Association of Tanzania Insurers are sitting at the moment to consider reducing the premium for what they deem for what they deem to be silent risks. And silent risks are defined as those not trading at the moment. They believe that the risk is less, and I think I probably concur with them. In the tourism sector, I'm not sure how much less, because certainly we've seen 8 empty camps at the moment, all washed out by the floods, which are all covered under a fire policy. Which the total of those claims is going to be several $1 million. So I'm not sure if the risk is that less. It's not just the fire policy. But in Tanzania, they are actually considering allowing concessions on the rate. So if the person who asked the question is in Tanzania, sit tight and hang fire and see what happens. In Kenya, I don't think it's going to happen. I think it's just one of those that it's a risk which is still there, because you still have assets there. And the risk isn't just fire, it's also floods and storm, lightning, which we've had a lot of lightning claims as well over the last few years. So I think it's one that you could have to just bite the bullet. But again, without wishing to sell ourselves here, if you want to contact me, if you're not a J W Seagon tourism client, we have our own bespoke policy called Safari Plan, and the rates are quite competitive on that as well. So I'd be happy to look at that for you.
Okay, James, a COVID-related question with Weber. If an employee contracts COVID-19 while at work, would they be able to claim through Weber?
Okay, right at this moment, the insurance industry in Kenya has not imposed any exclusions for COVID-19 at all. I believe, however, that the person claiming will struggle to prove that they got it at work. And so a claim that they make, it may be hard to prove. I have no examples of it yet. I have nobody else has put in a claim for it. They may sue the employer and take legal action against them. And if you have employer's liability insurance, that policy will, if you want to defend the case, will defend the case. And if you lose the case, will pay defense costs and compensation. But again, I think an employee would struggle to prove they caught it at work in the current market. That's the thought in the UK, where we don't have Weaver, but we have massive employers' liability problems here with people suing their employees. And there's nothing being said about it here. I think longer term, it probably will be a general exclusion across the market. Right at this moment, can't give you a yes or no answer to that one.
Okay. This is a question, Jeremy, that you touched on during your presentation, but I noticed a few more people have joined the call. You know, are JWS negotiating with insurers to get concessions and better payment plans on premiums in consideration of the current environment? Yeah,
absolutely. So payment consideration, already touched on that with the section about instalment plan. And if you haven't, if you joined us late, this is being recorded and will be distributed to everybody. So there's a section on that on instalments. And in terms of premium concessions, absolutely, we are pushing very, very hard for concessions. One of our slight disadvantages at JW Seagon is when we've been relatively new to the business in terms of the general insurance side, so 7 years now, and we've hit the industry hard and tried to negotiate very, very competitive rates anyway. So some of our clients are as low as they are going to be, and certainly the ones that are having big claims, not a great deal of room for manoeuvre. If you're claim free, then certainly by following what I've advised you on choosing your insurance company, looking at alternative insurance companies and different ways of writing your business, then certainly there are discounts available. And we're certainly pushing as hard as we can, because our clients are no different from any other client. They are looking to save money.
Okay. There's a very interesting question here, Jeremy, actually, and I think it actually affects all of us at the moment because we're all working from home. But for those working from home, can they claim on Weaver should they get injured during working hours?
Yes, they can.
Yeah.
Yeah, they can, because it's they are working hours and it's during occupation. I could be here in the UK and I'm still employed by JW Seagon and I'm working for you, David. And if I happen to trip over a wire, actually, it's an idea. If I happen to trip over a wire and injure myself, I could not sue you. I could claim under Weaver. It's not where you are; it's your employment status and whether you are actually officially working. So the answer to that is yes.
So that's reassuring for everyone really who are working from home and obviously have a decent Weaver policy. So Jeremy, there's $1 million question here, and I don't think we're going to hold you to account with your answer.
Right.
But it's what are the likely impacts of the corona pandemic on insurance premiums generally? And it's a difficult one to answer, but do you have any views on that?
Well, it is a difficult one, but I have my own views. And I had my own business in the UK right in the middle of 9/11. And 9/11 was a phenomenally massive impact on the industry. Even though it was one incident, the ramifications of it were humongous. And we saw 6-7 months later, insurance premiums in every sector going up by sometimes up to 100, 150, even 200%. I'm not suggesting it will be as much as that, but I think you need to hang tight, because I can see premium rates going through the roof. I really do, because it's not just the local market, which is a small market. The Kenyan market will probably shake their heads and go, oh dear, that's it. But it's not their insurance problem, it's a reinsurance problem. So all the local market buy international reinsurance from massive conglomerates like Allianz Group, like Munich Re, like Swiss Re. These reinsurance companies will say, we've caught a cold on this. This has cost us, because it's not just the local insurances, this is event insurance. So people are paying out for cancellation of the Tokyo Olympics, of Formula One, of the Premier League, of Wimbledon. Any massive sporting event, people are paying out. So it's not just fire insurance, it's event insurance. This is going to cost the industry billions and billions and billions of dollars, and we will pay for it, in my opinion. and it will probably will pay for it in 2021. So sorry to say, you need to hold tight. I think we're in for a nasty ride. Not sure about the medical side, David. That's your baby, and you'll know more about that. But on the general side, I think there's going to be massive ramifications.
Well, just on that note, I mean, under our international medical portfolio, we haven't had a single claim yet, and when discussing with the insurers, they haven't had one either. So it is rather surprising. But they have gone. The international insurers have gone above and beyond what they need to do to ensure that cover is in place. And actually, anyone with excesses and things like that, the insurers have said they won't. They'll pay the excess as well for the client. So they've been very good. So we're getting quite close to the end of the questions. I've got a couple more here, and then if anyone else wants to ask any questions, they need to sort of send them through quickly. One here: is depression as a result of all that's going on associated with the COVID-19 situation also covered by a Weaver if one is on uncertain and changing times of employment contract?
Yeah. Again, in the UK, you could probably bring an action against your employer for not providing suitable advice, health, HR assistance, looking after people, giving them counselling, etc., etc. And there will be claims in the UK. I believe in Kenya, probably, sad as it may seem, I think you may be laughed at if you try that. I'm not sure. If somebody claims for depression under Weaver, then they'll put in a claim. We'll put it to the insurance company. I'm not sure what their reaction will be because we've not seen one yet. If somebody sues their employer, then that is deemed to be under employer's liability, and as long as you've got employer's liability cover, that will pick up the defence costs and any compensation should you lose the case. So make sure you've got both covers is my advice to you at the moment.
Okay. Under some of the policies, Jeremy, and some of the business interruption covers, there is some of the past pandemics have now been included, haven't they? And you can specify a pandemic. Do you think they'll get to the stage where in the future you might be able to specify COVID-19 as a covered risk?
No, I don't think so. I think the insurance industry will look at this and say, right, where there is a dispute, we'll deal with the dispute. If we lose the case, we'll pay these pandemic claims. If we don't lose the case, then we will exclude it going forward. I can't see anybody considering doing it for the next 2 or 3 years. What might happen in the future is that the insurance industry gets together and does what's called pooling, and we have that for terrorism in the UK. So after the last attacks, or the attacks 20 years ago or so ago, we had a terrorism scheme called pool reinsurance. So everybody who wants terrorism cover pays into one big pot, and if there is another terrorist attack, that company pays the claims, not the insurance company. So they may do something like that for coronavirus or similar pandemics. So it's wait and see.
Okay. Well, Jeremy, we've gone through most of our questions. So can you finish off with any bright note or bright sort of advice?
Bright note, positive? Yeah, bright note. The bright note is this: we all know this will come to an end at some stage, and like everybody, we're digging in. I hope everybody is digging in, but remember, it's your personal safety is far more important than the business, in my view. I think we've got to heed all the advice, listen to it, and everybody stay safe and take care. It will get to an end at some stage.
Yeah, no, I agree with that, Jeremy. And I'd like to finish off by thanking Lisa and the Ikigai team for asking us to join you today in your webinar and speaking to your sort of your residents, so to speak. So I hope they've all found it informative and useful, and you know where to find us if you need to find us with the contact details on this slide now. So thank you again, and everyone stay safe.
Thank you, David. Yeah, I think we can end the session here. For those that joined us a bit late, I did mention at the beginning that the J W Seagon team were very helpful as we tried to navigate how we could save money on our insurance premiums as Ikigai. So we will help you get in touch with them. Their contact details are there, and we'll also share them in the follow-up email along with the webinar recording. Yeah, so thank you very much for joining us. Thank you, David and Jeremy, for the session. And have yourselves a good evening.
Thank you, Lisa. Thank you, everybody.
Bye.
Bye.
Bye. Bye. Bye.